the Jamaica Customs Agency. At this time, we will have Miss Celia Ann Sanderson, who is a technical specialist of the Tax Administration of Jamaica, coming to us with some very important ways in which we can do business with the tax administration. Please help me make her welcome.
On behalf of Tax Administration Jamaica, thank you very much for giving us the opportunity to participate in your in this workshop. Noon. Yes. Yes, it is soon lunchtime, so I will try to be very brief in sharing with you tips on doing business with Tax Administration Jamaica. All right, so we'll look at conducting business with TAJ online. I will share with you the tax incentives for the developer and the occupant, and look at the rights and obligations within the ambit of tax administration as you operate within the special economic zone. So let us begin by doing some business online. First, you can visit www.jamaicatax.gov.jm and gain some information. On your left, no, we are right, sorry. But it's going to be your left when you're facing the screen. You get information, especially key or tax professional section, or publication section, and our how-to section. Those are on our navigation tabs. So in event that you did not get everything or did not make a note of everything of how to do things online with tax administration, just visit our how-to section and you will get step-by-step guidelines for the specific tasks that you want to have done with TAJ. So having gotten some information, we need to acquire a TAJ portal login. It's quite simple. Create an account or use the account you already have. Now, everyone have an account, right? Yes? Very good. So let us log in and do some non-log-in business, such as pay your traffic tickets as an individual person, or you can do some validation services. Now, this particular area is where you have your tax compliance certificate. Once you have acquired that certificate and you have given it to someone who asks for it, all you have to do is ask that person, the recipient, to create a login with us and do the non-access or non-login validation service and validate that certificate. When you give your suppliers that 0 rating letter, just guide them through the process of how to validate that letter. And if, for example, you happen to receive one, you validate using the non-login validation services. There are more non-login business you can do with us, but that's general for all your tax portal account. So let us now access e-services, and that is where we file our taxes. Tax returns, we pay our taxes, we make requests. There's a thing called a Withholding Tax Certificate that you will be required to, and in the event you have received them, you will be under the certificates. You can also now make some very requests by saying, I want to. If for some reason what you want, just click on the button More Options and you will see what is available to you. Now, point to note that as an occupant or a developer, company tax, SEZ, which I will brief you on further on. If you're able to zero rate, so you must be able to say, I want to submit zero rating documents. If for some reason you do not have these two elements, please, please, please contact us. Contact us at our customer care center, or contact your taxpayer education service officer or your CRM officer at the Montego Bay Revenue Service Center or the nearest tax office that is near to you, or the tax office that is near to you. So, having done our business, what must we do? Last business, we're finished conducting business online. What is it that we should do? Right, log off when done. Protect your login at all times, so when you're finished, please log off when you're finished doing business with us. Quite simple, quite effective, quite easy, is it not? Okay, the jury is still out on that. Nonetheless, that's how we do business online. Let us now go into the special economic zone tax incentives. First, the tax incentives are detailed in the first schedule of the Special Economic Zones Act. Be very familiar with that section. And please note, as said earlier, a valid operating certificate is required to access the benefits. So our first incentives, I will start with the easy one and get on to the complex ones. So the easiest one is the asset tax. The occupants received an exemption from asset tax. But as you're aware, based on the 2019-2020 revenue measures that came out last year, the asset tax is no longer applicable to the other specified bodies, which are basically unregulated companies. It does exist, but it's for the specified regulated entities. So occupants, you are exempt. Developers, you are liable as long as you enter during the period 2016 to 2018. Because the effective abolition of that particular section was from year of assessment 2019. All right? In terms of now, moving on to stamp duty, there's an exemption of 50% of stamp duty on the instruments for the purchase, lease, or acquisition of land used by the developer. Please note it's the instrument used by the developer to acquire land for use as a zone. The second incentive from stamp duty is 100% on instruments from the sale of land by the developer or occupant or zone user in connection with the development or operation of a zone. So your lease agreements, it should be stamped, but for the purposes of payment, you will have received 100% exemption. How do you access this particular benefit? Well, please visit our stamp section at the Montego Bay Revenue Service Center. We also have stamp services available at the Maypen Revenue Service Center and our regular stamp office on Harbour Street in Kingston. Whoops, wrong button. Next, we look at transfer tax. There's an exemption from transfer tax payable on the sale of land by the developer for the purpose of use in the development of or operation of a zone. So if a developer is selling his land for to be used in the special economic zone, then again, you have an exemption from transfer tax. How do we access this benefit? By visiting the stamp office or the stamp division of Tax Administration, Jamaica. Next, we move to the other easy one, which is the GCT. In regards to GCT, it is 0 rating. Please, please, please do not ask, how do you get an exemption from GCT? We cannot grant exemptions. That is left up to the Minister of Finance. What is granted is 0 rating. 0 rating is where the goods or services that has been supplied to you from our regular local suppliers for use in the zone can be charged to tax at 0% as opposed to the standard rate of 16.5%. That is what 0 rating means. So please, when you say 0 rating, I want to 0 rate the goods and services that has been supplied to me for use in the special economic zone that has the supplier is our local suppliers. Customs will deal with what happens at the ports. You can ask for 0 rating for electricity, and you can ask for 0 rating for your telephone services. So that is basically your GCT incentive in a nutshell that's available to both the developer and occupants. How do you access this benefit? Right. We go online and say we want to submit 0 rating documents. Fair enough? Question? One is uniform, insurance, and anything that will be used in the customs territory.
So currently, our company, we are charged taxes and then we claim back for the refund.
Oh, that's the,
Can we get?
No, so you pay the tax in the first place.
Yes.
Oh, you need to 0 rate first.
So
you 0 rate first. No,
so
no, remember, the 0 rating process is where you say to your local supplier, I would like to acquire some chairs, right? And we go to the chairs company and say, please give me a chair. So maybe what you should ask of first is, give me a performer invoice, right? And then you generate a purchase order and then make the submission for a 0 rating. So the 0 rating has to be done first. But can you use? But if you did get an invoice, then I hope you can prove to us if we ask that you did not pay it. Because you have, as long you must get 0 rating first. Because I know for the utility companies, they will give you the bill. So you have to give us the bill. But you have to ensure that if we ask, did you pay it? Because it has to be done before the payment. If you pay it now, if you paid, that is when you now apply for a refund. Only if you pay. But the 0 rating is the first thing you have to get the invoices, the performer, the purchase order 0 rated before. Because the 0 rating approval letter that is given, that is what you take now to your supplier.
And that is for each purchase?
Yes, for each purchase. The time, the earlier you do the 0.
Sorry, I'm sorry. So we're just going to ask that the questions go one by one. And Ms. Anderson, you can just identify who I should give the mic to.
Right. I'm just going to finish up with the process. Now, in terms of turnaround time, the earlier you submit the necessary documents and liaison with your taxpayer service officer or the client relationship manager, then the turnaround time should be fairly quickly. But if there are issues, there might be meetings.
2 to 3 days. 2 to 3 days. It can be longer depending on how much we have in the queue, but it's usually 2 to 3 working days, not weekends.
Not weekends. Thank you.
Okay, so we have a situation where our landlord, we pay maintenance, okay? And part of that maintenance, part of that maintenance includes water and electricity. Our landlord has asked us to provide to them our zero-rated certificate. But we don't have one. Do we have to do that every month?
Yes.
We have to do that
Yes.
every month.
Yes. Every bill, every month, yes.
Not every month, but every bill.
But every invoice,
Every
yeah.
bill?
Yeah.
So we have to hire somebody to do that.
Any other questions?
So, any other concerns you have in regards to zero rating, I encourage you to dialogue with my colleagues afterwards. When you for further information on zero rating. Final question regarding this particular section.
I just want to confirm. So you're saying when submitting, you can submit with a performer or?
Just a purchase order.
We will accept the tax invoice, but the loss is purchase.
The order, yes.
But we should have the actual invoice in the event you guys request it or audit. Okay.
This means the purchase order you ask for. But we may ask for.
So I have a question. Let's just say you have multiple invoices from one specific vendor. Can you submit multiple under, or do you have to do individual per?
You can submit multiple.
Okay.
What if we have a blanket PO? What if we have a blanket PO? What if we have a blanket PO?
No, I'm sorry. It's the PO for the particular payment.
For a period of time.
Yeah,
But let's say
Is it that you're going to make a block payment at the time, or you're going to pay monthly? Or how are you invoiced?
This blanket PO covers a 6-month period.
It will work so your landlord will be needed to pay that GCT every month for himself, because what they will give you is an
You can tilt the machine.
but GCT is a monthly tax, is a tax that you have to submit a return for on a monthly basis. So it's not an annual. So say your lease for the year, no, so your lease payment is a monthly payment. But you get the JPS bill, and you have a couple days to pay. So when you get the JPS bill, you just do your PO, load it up on your e-log, and within 2 to 3 working days, the exemption comes back, and you just pay your bill. Pay less the GCT. Yes. And you will get a letter, you will get a standard letter from JPS that you just send along with your payment each month. But it's not difficult. Every month, because it's a monthly bill you get, and the GCT can vary from month to month.
All right, thank you. Oh,
All right, can I just
Yes,
interject right here?
Thank you.
If it is that you need an advisory, colleagues, if you need an advisory, you can contact us at the Montego Bay office, where we can come in and give you step-by-step information of what you need. Sure, you can see we're at the outside. Okay, thank you.
Thank you. So that takes care of our easy tax incentives. Now we're going on to the incentives for the income tax. Remember that your income tax obligation falls within two categories. Ready for income tax? Right. Remember that your income tax obligations, your obligations of the Income Tax Act falls under two categories. The obligation to report your income, which is done through declare the estimated income, and your other obligation is to withhold taxes. What I'm going to be speaking on first is your obligation to report your income on an annual basis.
Last spoke with me is that they're splitting their proposals in different sections. They're separating different sections. They have sent me the section that now belongs to JSEZA. They're resending the section belonging to.
All right, currently we have introduced two new returns.
So we're waiting on them to send us the last version and then we'll have to do the procurement. Yes. They sent us a final proposal, which I didn't accept some of the things, but they still had it side things like this lecture and that stuff. And I said, but I told them about doing all this. We sent it back with all of that. Said it was days.
Right, currently, as mentioned before, we have mentioned two new returns. The IT-15, which is the annual return of income tax payable for annual bodies. So for those who are transitioning from the free zone, you would have been able to file the ITO2. You will no longer be required to file the ITO2, but the IT-15. The new entities, your new return is the IT-15 for the annual return, and the IT-15A, which deals with your estimated income tax return. Zone users, Mr. Zone user, hi, welcome. Even though you operate within the special economic zone, you are still required to file your ITO2 as a company and the ITO7. Because as you know, the zone users receive no fiscal benefits under the Special Economic Zones Act, right? All right, so let us look specifically now at the transition in free zone, the transition in export free zone entity. Now, persons who have transitioned from the free zone into the Special Economic Zone between August 1, 2016 to December 31st, 2018, you would have enjoyed your benefits from January 1 of the year of assessment in which the transition occurred. Where you transitioning now, so that's basically when the person, this particular provision is applicable when you transition during those two periods. So if you report for your calendar year, January to December, that's your reporting year, and you transitioned during the 1st of August 2016 and the 31st of December 2018, then your SEZ benefits starts from the 1st of January in relation to the income tax. No, 2018. The law speaks specifically to this particular period. So when you report your income from January to December, your fiscal benefits, your income tax benefits would have started from January 1 of that year when you transition. If you transition during the 1st of January 2019 to the 31st of July 2020 and report and your reporting period is from January to December, then your SEZ benefit starts the day you enter by virtue of Section 55, which speaks to the free zone benefits being terminated, or you no longer, as a free zone entity, you no longer enjoy the fiscal benefits of the free zone when you enter the special economic zone or the 31st of December 2019, whichever one comes first. All right? Meaning, if you came in, anybody came in 2016, 2017, 2018? No. All right, so most persons did not. Those who came in 2019, anybody came in 2019? Yes. What is your accounting period? What is the reporting period for you? January to December? January to December. Very good. Therefore, this particular provision will not apply to you. What would apply to you is a provision that states that when you enter the special economic zone, that's when you get your operating certificate, which signifies that your agreement is in place. That is when, so the day before, your free zone benefits is the last day, right? So if you entered June, for example, the 30th of June, then your free zone benefits would have stopped on the 29th of June 2019. So therefore, from the 30th of June to the 31st of December, that is when you have your SEZ income. All right?
Or SEZ benefit.
Or your SEZ income tax benefit, right. Yes.
Which is a negative.
That's debatable. Debatable. But, so therefore, yes. So therefore, you're required now, because at the end of the year of assessment, you're in the free zone, you're in the special economic zone, you're required to file the IT-15 and then would have to report the apportioned income. So notwithstanding what was said before, where your free zone entity and use a permitted accounting period, this is a period that is not January to December and transitioned into the special economic zone during a calendar year, then your SEZ income is a fraction of the income earned from the period January 1 to the end of the permitted accounting period. So let us break it down a little bit more. If you have a reporting period, anybody has a permitted accounting period like April to March? All right, April to March? May to April. So the permitted accounting period is May 2018 to April 2019. When did you transition? Did you transition during the calendar year of 2019? Yes. So that would mean that your SEZ income started from the 1st of January to May 31st, 2019. That is what this provision is saying. Yes? No?
So again it means that you are paying the 12.5% for that period when you didn't beforehand.
Right.
Excellent.
You will still use, because your because accounting period now ends in May 31st, 2019. Your year of assessment is 2019. So you're at you would then have to use the IT-15 and do the apportionment accordingly. Provisions have been made for you to report the incomes accordingly on that particular return. Then we now go to our capital allowances. Now this capital allowance provision, I must confess, is a bit worded. So I've tried here to summarize it. Now basically what it says is that if you acquire, when you're transitioning it during that transitioning period up to 31st December 2019, and you did not claim, for example, you have assets that don't include private motor vehicle, and you did not claim any initial allowance during your time as a free zone entity, you can claim it if you didn't claim it before, right? Because your assets have been deemed to be acquired the 1st of January 2020. So if you had claimed initial allowance and not claim annual allowance, then you can claim annual allowance. If you did not claim initial or annual, then you can claim both, where it is so provided. All right? So let me repeat. If you are claiming initial or annual, or both of them, then you cannot then claim it again the 1st of January 2020.
What's the benefit?
The benefit would have been for those who acquired these particular assets during the period and were not claiming it before.
That's the bulk of what we say. That's where the benefit lies. Apart from the employee tax. That's our biggest reduction.
That's our biggest reduction. Could be. But let us look further and see if the arguments still hold true. That's basically capital allowance provision benefit in a nutshell for the transitioning free zone entities. The following, the remaining incentive will apply for those who came in as new companies and for those who have now completed the transitioning process and are occupants or developers or single entities. So the first one is the profit derived from rental of property in the special economic zone to unconnected parties. It's exempt from income tax, which means that it's really not subject or brought into the calculation of income tax, of the actual income tax calculation. So it's exempt. But please note, it's to unconnected party rental. Where the developer is rented to a connected person, that transaction has to be carried up to, you have to ensure that when you report it to us, it's reported at arm's length, what a regular independent person would rent your property for, and this is subject to tax at 25%. Right. So now we go now to the benefit in relation to the trading activities within the zone. That particular rate of tax is at 12.5% on the chargeable income from trading activities within the zone. Sounds like a plan?
Yeah, you have to qualify that with a plan. It's a plan.
It's a plan, right. So the other benefit is where 0% tax on the dividend income derived by shares held by the developer or occupant. So this is where you have your investment in other companies, especially those resident in Jamaica. The rate of tax for that particular dividend is 0%. Employment tax credit, that is next. It's basically a credit which is basically the law of 10% of any tax payable in respect of income, profit, or gains, basically on your trade. So you find 30% of that. And then you look at your specified payments. What's the amount that I paid for education tax, NHT, and NIS, and HART? I sum those up. Only the ones that were paid and you filed and paid on time, that those specified payments on time, right? So you sum those, compare the value, and take the lower of the two amounts.
Sorry, what's the first one?
The first one is 30%. You find your 30% of the tax payable from your trading activities.
Not from it.
the tax on the profit. So you find the tax on the profit, then you find 30% of that.
30% of that.
Right, and you hold it, yeah. And then you compare it,
To your,
specified payment,
and then we can,
take the lower of the amount, whichever one is lower. So when you compare both figure amounts, one will be lower, so you take the lower amount as a tax credit. And that's a tax credit.
are you saying that there's a consequence for paying late?
Yes, there's a consequence for paying late. It is not now brought into the computation of your ETC. So if you paid 3 months late, 3 out of the 12 months late, then the only 9 months specified payments can be considered in this particular calculation. Yeah.
Okay, so you get 1/12 of the year for each one you pay on time.
Basically, but with some all that are on time. The other benefit as it relates to the employment tax credit is that the ETC clawback provision does not apply to the occupant. So, when you file your ETC, you would have filed it by March 15, 2020 for argument. 16, 2020, right? Then you as a board make a decision to make a distribution, for example, a dividend payment afterwards. You'd have made a distribution. So you had cleared the ETC first, but then made a dividend payment, meaning that you paid your shareholders dividends. So the clawback now is where you have to pay us back some of that ETC amount. So if the occupant claimed ETC, made a dividend distribution, then they would not be required to pay us back that ETC. However, the developer would be required to pay us back that clawback provision would not trip in.
No, I don't understand that one. Yeah. Okay, so the employment tax credit is just what you've gone through, the 30% of tax
Right.
and the total of the NIS and NHDM. Okay.
Right. So you would have put that on your income tax return.
Right.
And submit
so
it.
here's the thing, I employ people.
Yes.
I employ an awful lot more people than my developer that I work with does.
You-
So I'm going to get tax credit.
Yes.
Perfect, and I'm the occupant.
Oh, very good.
Okay, so I just claim it. That's
So you
done.
claim it.
Sorry,
So you can claim the
I claim it, yeah.
Then you made a decision as a board to make a distribution to your shareholders. Because you're a
Right.
company, right?
Yeah,
Right. So therefore, because you made a decision, you made a distribution in the form of dividend payments, for example.
Right.
Then you no longer have to pay back TAG any of the ETC that you paid, because you are an occupant.
You're not good for.
I don't have to pay back anything,
No,
I've
you
just
don't
deducted
have-
it.
Right. You claimed it, which is fine.
Yes.
You made your
So it means I don't pay you some of the money.
very good.
Perfect, okay, so I pay you less money than I should. Good.
You got
And
the
now-
credit.
Let's talk about you paid dividends.
You got the
You
credit.
paid dividends.
And then
from
ma-
it, she's talking about.
No, you made a dividend
dividend
payment,
declaration.
not really from it, because you pay the tax after
yes.
the fact,
That's
right?
what I'm saying.
Right.
Okay.
So you're not good.
So you're in good stead because you're an occupant. However, the developer now, that clawback provision that we just discussed will apply to you. A single entity would get the benefit of an occupant.
Well, good answer, good answer. Thank you, Chantal. Thank you.
The single entity receives the benefits of an occupant. So we have the that was the employment tax credit. We have the promotional tax credit. This is where we look at the comparison. What is in the legislation currently is that where you incurred research and development expenditure and training expenditure, the sum of those, you can get up to a maximum of 10% of the tax credit on the profit. This is not written properly, unfortunately. All right. So what it's basically saying is that you look at your research and development and training expenditure, and then you look at 10% of your tax from trade within the SEZ. Then you take the lower of the amount. So you have the research and development and your trading expenditure. You sum those. And then you find now 10% of the tax on profits from trade within the special economic zone. You compare those two figures and you take the lower of the two. That's how you get up to the maximum of 10%. That becomes a promotional tax credit.
So, basically chargeable for 12 and a half.
Remember, no, you would have claimed your research and development and training expenditure. So it's reducing your trading profit in the first place. And then you would have charged your tax at 12.5%. Now we're looking at the credit. Because you claim the expense, we say sum those two expenses and look at 10% of the tax, that was at 12.5%, and then compare those two amounts and then take the lower of the two. So after we have gotten to the 12.5, you're saying then we can measure what we have put in for training, and if it is, and use the lesser to offset the 12.5? No, let me put it more into context for you. The first thing you would, in terms of claiming a tax credit, we would have ascertained our tax at 12.5. Then we take our tax credit, which is a promotional tax credit. Now, what is that amount? That amount is where we compare the sum of the expenditure, expenditure on research and development and training, and compare that total with 10% of the tax on profit from trade within the zone. So if your research and development expenditure was $2,000 and the 10% of the tax on trade is $1,500, your promotional tax credit is $1,500 because the lower of the two.
Okay.
No, it's a tax credit. So having determined that the amount is $1,500, we would then reduce our tax credit of $150,000.
Okay, so now we've got two. So let's say I calculate the tax on what I should pay at 12.5%. And let's say, because this is the limit of my mathematics, round figures, okay, so it's 30,000.
That's 12.5%.
Correct, 30,000. Okay, so the first thing I do is I do the employment tax credit.
Right.
30% of the tax, well, call it 33. Okay, so it's 10, yeah? 30,000 is what my tax at 12.5% would be.
Okay, yeah.
Yeah, okay. And so now the first thing I'm going to do is I'm going to compare 30% of the tax, which is 30,000, correct? No, I'm going to the first one first.
Oh, really?
All right, because two. So I do 30% of the tax, okay,
Right,
which is,
nine.
call it a third, okay, because my maths is awful, so 10
$1,000.
grand.
10 grand.
And then I look at all of my NIS, NHT and what have you, and it comes out to, if it comes out to 10 grand, it's a wash. 10 grand is what I get.
Yes.
If I employ less people, then it might be 8 grand in all the NHS and NHT, so it's 8 grand. Okay, right. So now, let's call it's the same, 10 grand, okay? So I claim the 10 off the 30, that's the first, okay? Now I go to the promotional tax credit. Am I looking at 10% of
30?
the 30 or the 20?
The 30.
Okay, so it's from the original for each one. Okay, that's that. I don't think the tax department agreed with that one when it started.
No, but you're correct. You're correct. You're correct.
Yeah, okay. Could you tell us about what makes up R&D and training?
Training is where you train your staff, and if you had done any research and development in the normal course of business. For example, you're building a prototype, and you have incurred research and development expenses, and accrued it according to the accounting principle. That would be your research and development expenses.
So, training.
So, for example, in terms of doing research, for those of us in HR that have to pay for salary surveys and other research instruments.
But remember, the research and development has to do with the product that you're developing to offer.
Well, the product that we offer is a service. So it could be that I'm hiring a new person and I need to find out what the market salary is for that position, which comes at a cost.
That's not.
No, that's not research. That's not necessarily.
It is for me.
To determine that, but you remember, you have to follow the regular principle of research and development. What research and development expenses did you incur in developing that product?
Yeah, yeah.
Right?
Yes.
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 So if you look at the IFRS, yes.
So if you're sending out surveys to do research, or if you're doing it, okay, so you're paying the party to go and do research for you, but that, or to provide the information, but that's not, I think research and development is, let's say you went out and grabbed information, and you paid someone to do it, but then you developed a program that would go out and capture the information. All the costs involved in the developing of the program to do it would be research and development, but the operating of the program itself is not. And that's sort of... So, but whilst I got it now, on to the training. So we train people.
Right.
We're going through formal training courses ourselves, and then we do ongoing training, and we can train people from one task to another. All of that's legitimate if we itemize it?
Right, as long as it's whole and exclusively incurred in earned income.
Okay.
In terms of that particular training expense.
And if a seminar goes on as a sort of management training, and we pay for some of our staff or our managers to go on these things, it's all training.
Yeah.
But in the end, we'd have to justify it to you.
Right. Basically.
Okay, that's the...
Sorry. What I'm saying is that these two particular expenses are what is compared in with the tax, 10% of the tax determining a promotional tax credit. All right? It's up to the maximum of 10% of the tax.
So, for everything like a policy, it's continuous training throughout the year, right? So is it taxed on the total number of hours spent on training? Because you say research and development, meaning product base. Let's just say we have a specific product and a certain amount of funds is allocated towards research and development. Am I being tax on the number of research and development that's done per year, or is it the total hours that's put into research and development for training?
What was the value of the research and development?
It's the value of the overall.
Expenditure that you incurred during that year of assessment?
But it just cannot be more than 10%.
No, the credits. You could have spent a total of $2,000, and 10% of your tax, on 10% of the tax is $1,500, and your promotional tax credit. So you have your total expenditure here, and you have 10% of the tax, which is $1,500. Then the lower of that, because the maximum of is $1,500. So your promotional tax credit is $1,500.
So the rule is, for a company, spend more in the year, okay, than what you expect 10% of your total tax is going to be on either training or research and development. That's it. That's how you get the 10%. By showing that you have done X amount of research and development.
It's more the value of the expense.
Yeah, no, that's what I'm saying. Yeah,
I can't tell you how much to spend on it.
Oh man, it's a mathematical thing. Okay, I now know how much to spend. Thank you. Forget the max.
I was just going to the R&D. Just look at the IFRS definition of R&D.
All right. So having deducted these two particular credits, you should be able to now ascertain your net tax payable. If you have any other tax credits which would have fallen under the ambit of the Income Tax Act, once you take those credits, then you have your net tax payable, and that's the amount to be paid. So that would have been taken. That specific to the incentive? No, only these two are available. All right, now we're going to go on.
With all things being equal, you should then be able to reduce your 12.5 to about 7?
Effective. That would be the effective tax rate. But please be reminded that there will be no 7.5% rate of tax on your income tax return. Only 12.5% and 25%, because the rest of your income will be taxed at 25%. Fair enough?
What income?
If you have investment income, that will be taxed at 25%, with the exception of the dividends that in shares that you hold in other companies, which is taxed at 0%. Fair enough? The slides will be modified a bit and should be available in future. There's supposed to be there's going to be a modification to the slide, but it should be available on our website. Yeah.
Shortly?
Maybe in the next 2 weeks. All right. All right. But please note that all of these benefits are in the first schedule of the income tax, of the Special Economic Zone Act.
But they were written by a lawyer, and now they're being interpreted by a tax person. So this is good that the two of you are together.
Fair enough.
Is there any intention to reduce or to increase that 12.5%?
Pardon me?
Is there any intention to increase or reduce that 12.5%?
I cannot say. That is up to the Minister of Finance.
Oh, that was a throwaway one.
All right, now we're looking at your withholding tax obligations. Now, previously, some of you may have been operating from 2000 prior to 2016 and have been withholding some taxes in the form of dividends and miscellaneous payments, basically payments tax on the payments withheld to non-residents. We have been submitted some letters and the checks for the payment to say that, hey, I withhold some tax. That's no longer the case now. So in terms of the tax that's withheld on dividends and the tax that is withheld on miscellaneous expenses, that's usually the expenses you would have paid to non-residents, Those are to come in through our IT 13 and 14 returns respectively. So you do have an obligation. Your obligation to withhold does continue. Your SO4 obligation with regards to withholding tax from your employees and the statutory deductions as well, those will continue, and you will basically be required to continue to file your employer's annual return and make the monthly submissions of the statutory remittance of payroll deductions. Right? The withholding tax returns, the IT 13 and 15, they're due 14 to the end of the month in which the payment was made, while the SO2 annual returns are due March 31st in the following year. The monthly statutories, which you are used to, are due 14 days at the end of the month in which the taxes and statutory deductions were made. So in relation to your withholding tax obligation, from the incentive point of view, is that the occupant, when the occupant is required to withhold tax at a rate of 0% from distribution by way of dividends paid out of the profits from the conduct of a trade within the zone, the rate of tax to which the rate to withhold the tax when you make this particular payment to a resident is at 0%. What you must bear in mind is the source of the payment. The source of that dividend payment is from trade within the zone. If, for example, as an occupant, you paid that dividend from another source, then the rest of the Income Tax Act would apply, which would mean that you would have to withhold at 15% if it's paid to a resident. In terms of the developer, again, you're supposed to withhold dividends withhold tax at a rate of 0% from your non-exempt income from trade within the zone. From the conduct of trade where it is made to a residence. Now, what is your non-developers? Developers, pure developers. Who are any pure developers here? No? Well, for the pure developer, that non-exempt income is your rental income that is collected from your connected persons, your subsidiaries, etc. If you pay your dividend from exempt income, which is your connected person's their unconnected person rental income, then you will be required to withhold the tax at 15%. Same thing applies to in terms of the withholding rate of tax to the non-resident. However, please bear in mind the source of that dividend payout. So if the dividend payout is from trade within the zone, then when you pay your non-resident shareholders, the rate of tax is at 0%. If you, as an occupant, if you pay the income from somewhere else, then the non-resident provisions basically apply. Some additional information to note: that group head office provisions that are currently in the Income Tax Act does not apply within the special economic zone, as well as where you have a developer occupant that is carried on activities within the zone which are outside of rental income, then the developer occupant is required to form another company. There is no relief under the Bauxite and Aluminum Industry Encouragement Act, the Income Tax, the Large Scale Projects Pioneer Industry Act, nor the Urban Renewal Tax Relief Act. You're all aware of your rights and obligations. which basically file pay on time and to keep proper books and records. If you fail to file, we will serve you a notice to deliver our returns that are late. We have late filing penalty for any return that is submitted after the due date, late payment penalty that's applicable to your withholding taxes. Interest will accrue on any outstanding amount, and all else fail, the commissioner may estimate to the best of his judgment your tax liability. Your rights basically is to object within 30 days of any receipt of any notice of assessment, right to appeal to any decision, and contractors levy apply, and your property tax will apply unless you're a developer who has a master concession agreement where the land is invested within the Jamaica Special Economic Zone Authority. Further information can be gathered from us by contacting Tax Administration Jamaica. That brings that close to my presentation. Thank you very much.
Thank you very much. All right, and after such an interactive presentation, I'm sure that everyone now understands much more clearly the tax regime. Now, the tax administration has a booth on the outside, and after this function is finished, we do invite everyone who has further questions to make their way to the booth and inquire as you feel fit. Now, at this time, we welcome Ms. Bridget to the stage, as she will be giving her presentation on customs and how it is we can import and export within the Special Economic Zone regime. Please help me make her welcome.
Good afternoon, everyone. I am here with my colleague, Bridget Cunningham Campbell. She's the Director of Marine Operations. Thank you for staying and bearing with us. Jamaica Customs has 3 specific mandates: the equitable collection of revenue, protection of Jamaica's borders against illicit imports, and the facilitation of trade. In an effort to fulfill its mandate, the Jamaica Customs Agency has partnered with the Jamaica Special Economic Zone Authority. Jamaica Customs carries out these functions by assessing and collecting custom duties, fees, and penalties due on imports, detecting and apprehending persons engaged in fraudulent practices designed to circumvent customs-related laws. Okay. Okay. We also protect the general welfare and security of Jamaica by enforcing import and export restrictions and prohibitions, including money laundering. This presentation is geared towards providing a greater understanding of the role of the JCA in its day-to-day operations at the zones. All of this was done by my colleagues before from the JSEZA. Definitions. In order to facilitate the efficient operation of the zones in Jamaica, the Commissioner of Customs and Excise shall make arrangements for the availability of customs services in the zones on a continuous basis to meet the needs of the developers and occupants. Customs procedures and systems that enable electronic transactions and payments and pre-arrival clearance of goods. the facilitation of imports of capital goods and equipment destined to remain in a zone, the efficient transportation of goods and equipment destined for a zone from the point of entry under customs control directly and without any unnecessary delay to its destination, subject to complying with such security and bonding arrangements as are acceptable to the Commissioner of Customs. Expediting the determination of the accuracy and authenticity of declarations concerning imports and exports into or from a zone prior to the release of the goods. The release of goods from a zone, the release of goods destined to or originating from a zone prior to the final determination of customs duties, taxes, fees, and charges, provided that all regulatory requirements, including security requirements, have been met. The expeditious release of low-risk consignments, the expeditious release of goods bound for a zone entered through air cargo facilities, provided that all regulatory requirements, including security requirements, have been met, import and export of software through a data communication link. We also facilitate efficient and flexible procedures and practices to be applied for goods imported from the customs territory into the zone and vice versa, simplified custom procedures for the movement of goods through the customs territory from one zone to another. Goods entering the customs territory from the zone shall thereupon be deemed to be imported into the customs territory, and the provisions of the Customs Act shall apply accordingly. Duty-free relief. Goods imported into the zone by a developer or an occupant shall be exempt from customs duties. Goods imported into the customs territory by an importer on which customs duties are paid shall, if sold by the importer to a developer or an occupant in a zone, be treated as having been exported from the customs territory by the importer. The provision of the Customs Act in relation to obtaining a refund of customs duties upon exportation of goods shall apply. Subject to the provisions of this Act, the Customs Act shall apply in the zone to the extent required for the Commissioner of Customs to carry out his or her obligations under this Act. Importing into the SEZ. Items are to be escorted by a clerical officer from the respective points of entry into the zone. The Customs Single Administrative Declaration, the SAD, document will be prepared applying the relevant custom procedure codes prepared by a licensed custom broker. The following codes are used within the free zone. I'm sure some of you are familiar with these codes. Yes? The Special Economic Zone Certificate issued by the JSEZA are verified. The items entering the zone must be listed on a valid certificate. In general, no permit is required for items entering the zone, including motor cars. All items entering the zone must be examined 100% by a customs officer prior to being deposited inside a developer or occupant's warehouse or for consumption or processing. Items imported contrary to the declaration submitted to the JCA constitutes a breach of the Customs Act. Therefore, we ask that all items be duly entered on the IM9, irrespective of which port of entry you are using, whether the airport or the seaport. The only fee that is applicable is the Customs Administrative Fee, the CAF, which is automated. The SAD IM4 is prepared on which all duties, taxes, and fees applicable are paid. All items imported for the domestic market that require valid permit or license, same must be obtained and presented to us to effect the clearance of said items. 100% examination conducted of the item or items at the zone by a custom officer prior to being released. That is in relation to the exportation of your items. An escort will be assigned for goods moving from one entity to another, or a custom seal is attached. Additional documents required, and this is for exports in relation to our manufacturing companies. I'm seeing a representative from Baywind. I think Fargo has left us. Booking confirmation, dock receipts, and permits required by the destined country. A customs administrative fee is payable. A customs release is obtained from the custom officer on the zone. Disposal. The SEZ operator will write to the JSEZA seeking the requisite permission to dispose of an item or items. The JSEZA will write to the CEO, Jamaica Customs Agency, to inform the JCA that permission has been given for the disposal of items for a particular developer or occupant. The item or items earmarked for disposal will be examined and verified by a customs officer and quantified against the IM9 upon its first entering the zone. I hope and trust you're maintaining proper records and filing systems. The items can also be verified against the list bearing the serial numbers and model numbers, where applicable, that was duly submitted to the JSEZA. Disposal of items, usually done in the presence of not only a representative from Free Zone, but also from our internal audit unit. Internal audit unit representative and a custom officer from the Free Zone must be present for the removal of the crushed or smashed items from the zone to the designated disposal site. A destruction certificate will be prepared and given to you upon completion of this exercise. Thank you. Oh my gosh.
Just on that last one, to clarify, you're there to make sure we crush up the stuff.
Yes.
You also have to travel to the disposal site.
It depends on how we crush and smash, because we don't want it to be a case where when it goes to the site it is removed.
Or recombined.
Ah.
Okay, right. Yeah. So if it's sufficiently crushed, we don't have to dip in our pocket to accommodate you to the site.
No, you don't normally dip in your pocket for that. We just escort the items.
That answered both my questions.
Okay.
Can the items be donated?
Yes, it can be donated, but speak to me after on that matter, because the customs duties will become due.
If you want to donate, there's a process, but say you want to donate to a school. Schools are allowed to bring in items duty-free because they have a charitable arm.
They'll have to present that certificate, yes.
No. Okay, so I'm saying that if you want to donate to a school, schools are allowed to bring in items duty-free into the customs territory. So all they'd have to do is liaise with the Ministry of Education, the charitable arm, and they'll arrange all of that. So it's no cost to you, basically. The school will just deal with it. You may donate to whomever you want. That person may pay the duties, or if they have a charitable certificate, it's duty-free to them. So that's allowed.
Let's say customs. What do we have to provide to you in documentation?
Well, you would have imported your goods on the IM9.
IM9, yes.
So we would have a list. You would have a listing of what you brought in. So whatever you're taking out, we would ascertain that it was duly imported. And that's it. It's fine. It's a simple process. The broker would make up the import document. So whatever duties and fees are applicable, it would either be waived if it's a charitable organization, or whomever you're giving it to would pay those duties.
My question is, if I donate stuff to a school,
The school has a certificate.
stuff that maybe is a year old and they're changing its stuff out because we now want bigger monitors. I have my IM9 and everything, and my choice is to destroy or donate, but I don't want to pay any duties. So do I go to the school and say, here I've got these, here's the information, all the information and this, that, and the other. Does the school have to go through the Ministry of Education and provide you in customs with...
Well, there's a document that the Ministry of Education would provide to the school, and that is what the school would take to Ms. Pinnock's office at the free zone for the entry to be made up, and they could take out of the zone for the school. So it's a simple process. It is. Well, okay then. This is customs. I know that there's a certificate that can be issued. I don't know what the process is, but we can tell you who to talk to at the Ministry of Education. We can guide you to the person, the relevant person at the Education Ministry. And it usually works. You mean Education Ministry? We don't grant waivers. Whomever is importing would have their waiver in place. Education Ministry, if it's
Health.
Ministry of Health,
they'll have their
if it's a charitable organization, you know, you have those.
They have the charity certificate.
Then they would have their certificate, and we would already be privy to that. So once the declaration is made up, it's a simple process.
It's a simple process from the customs side.
Any other questions?
They're hungry.
All right, that seems to have been a brilliant presentation, and everyone is fully satisfied. So thank you, Ms. Bridget, for coming to us, and thank you for that wonderful presentation. All right, so now we're going to move into the closing remarks from Dr. Deans, and after which we'll have our lunch session. And we invite you not to leave afterwards, because we want you to talk. Everyone who is in this room now, if you have an issue, then the right person is here now. So we invite you to talk, get your answers, make your contacts, so that next week it's smooth sailing. Understand? So just look out for the JSEZA shirts, ask as many questions as you can, and let's just have a wonderful evening. Thank you very much for having me, and I now invite Professor Eric Deans to make his presentation. Please help me make him welcome.
Hello, hello. Hello, can you hear me? Hello, hello.
Yes.
This thing. So we're at the end of the day. I trust you all learned a lot. You know everything about SEZs. You know everything about the tax implications and benefits. And you know how to donate stuff to schools. So as I promised, I want to just close by saying where we want to take the special economic zone regime. This is not working with this. There you go. There you go. Okay. So I'll just quickly talk about what's so special, which you should have found out by now, and how we intend to put special through our business acceleration and aftercare services, and look at some of the projects which are in the pipeline. So the Singaporeans, who are very good and have some of the largest and most successful SEZs, came up with some clear success factors for special economic zones. These include clear objectives, bold policy initiatives, strategic and good locations, customized design, and effective management. So you would have seen from the map with the GIS locations, we have quite a spread. We also have a lot of single entity zones. That's not the most ideal arrangement for special economic zones. When you look at data from UNCTAD, the most successful zones tend to be large, well-planned, organized zones where you have the range of support services, the industrial clusters which assist and are mutually reinforcing, and you have, in some cases, other urban support areas that include things like housing, commercial areas, recreational areas, and so on. So you'll see zones being developed which are cities in and of themselves. So as mentioned before, our objectives include job creation, exports, industrial diversification, and technology transfer. I'm going to go through this quickly because much of this would have been covered in the earlier presentations. But the reason that we have them at the end, these presentations will be shared with you, so you'll get them electronically, so you can share them with your colleagues or refresh your memories. Now, we did some work with the Singaporeans. In fact, just last week, the ambassador from Singapore was here because we were looking to learn from their experiences in developing our zones. And they did a pro bono economic positioning exercise for us and identified what would contribute to us being successful as an economic zone location. And to support the zones, to support the movement of goods, people, information, money, there are some components which are important. So in addition to developing the special economic zones, we need to develop our air services to become an air hub. We need to develop our port facilities so that we become a maritime hub. And as such, we will be able to attract advanced manufacturing, assembly, distribution activities to allow us to become a manufacturing hub. And as you saw in some of the industries which we are targeting, we're very creative people. Jamaica's music is iconic, our art, our other stuff, but we have not fully exploited it. There are more people in Japan making money from reggae music than in Jamaica. We need to develop the ecosystem that will allow us, our creative sector, to develop the movie studios, the pre-production facilities, the post-production facilities. All of those facilities, there are currently investors who are looking at developing those specialized zones. And those will allow us to, the hubs that we develop will allow us to be special. So what's so special about Jamaica? As I pointed out in my opening remarks, what's truly special about us is our natural environment. We were in Dubai a couple months ago, and when you look at the development that takes place in Dubai, which is essentially a desert, they envy us because we have this natural environment. We have the tropical foliage, we have the rivers. They have to create green spaces and water it every day or it dies. They have to build areas where they build man-made lagoons or lakes, and they use those artificial icons to attract investment. We have it naturally. All we need to do is enhance it and ensure that our people are included in the economic prosperity. And as such, we will become truly special. So, we spoke about those earlier, but one other thing that we speak about is location. Now, Jamaica is the third largest English-speaking country in the Western Hemisphere. That's a massive advantage. We sit between the middle of a market of about 800 million persons. For the BPO sector, we frequently hear them speak about being on the same time zone as New York. All of these locational advantages are critical, but the advantages that we have do not just relate to North America. When we become that air hub, that maritime hub, that innovation hub, that manufacturing hub, in a globalized world, we're able to serve customers anywhere on the planet. That is one of our important advantages that we have, and we seek to capitalize in this special economic zone space. Now, this is a diagram which looks at, it came out last year from UNCTAD. They did a World Investment Report, and they focused on special economic zones. And you'll see on that map, Jamaica has 51 zones. But many of these are small, single entity type zones. You look at the bottom, you see Panama having 15. Honduras, 39, Guatemala, Nicaragua, Colombia, 39. But even though their numbers are smaller than us, their zones are much bigger and are much more involved in exports. In fact, in the DAMREP, over 60% of their exports is generated from their special economic zones. This map shows the amount of foreign direct investment going into the region. And while not all of it goes into free zones or special economic, it's a good proxy to show the type of investments attracted. Jamaica was 770 million. But when you look, if you recall the previous diagram I showed, DAMREP is making 2.5 billion in FDIs a year. Panama, 5.5 billion. Costa Rica, 2.1 billion. Colombia, 11 billion a year. Look on Cayman, 57 billion in FDIs a year, right? So you have to wonder, are we missing out something here? Is there an opportunity that we are missing?
But we're not allowed to do finances in the free zone.
No. But the good news is that we're getting a lot of interest and, from a wide range of countries, US, UK, Japan, Canada, Turkey, China, France, UAE, Qatar, Spain. So the investment climate in Jamaica is very attractive right now. And so within the next 2 years, you'll be seeing some very exciting projects rolling out. So when you go to the slide, you'll see I give an example of a developer profile and the scale of type of developers who are looking at Jamaica. They're looking at 100 million US projects, 200 million US projects, in some cases $500 million US projects. This is a comparison of, as I mentioned, we're in a competitive regime. Sometimes we think we're the best thing since sliced bread, but in reality, we still have a lot of work to do. So in terms of, Ainsley spoke to it, he highlighted the priority industries, but there are other industries which are looking at being located in Jamaica. Our SEZ Act, as mentioned, just has a negative list. It lists what is not allowed. Everything else is allowed. So that gives us a wide playing field in terms of attracting business. Oops. Oh, you'd have seen this earlier. Should have been taken out of the... Yeah, go again. Right, so in terms of where we're going, we're looking at large township type zones being developed. These will be spread across the country. Most will be along the southern coast. The automobile cluster and assembly cluster is what would most likely be in the Caymanas area. The pharmaceutical cluster would be either in St. Ann or Clarendon. The creative cluster, we're looking somewhere either in the St. James or Trelawney area. And the aluminum cluster in St. Elizabeth. These are, as I mentioned, large-scale projects up to 6,000 acres, and some of them multi-billion-dollar projects. Oops. So this just gives some information why we chose some of these clusters. I mean, Jamaica has one of the highest concentration of medicinal plants, and a lot of research is currently being done. We're working with an institute out of Harvard to establish Phytomedicine Institute. We're also partnering with other companies developing our cannabis, which is getting a lot of attention. We have a couple projects which are already in the pipeline. I think we have about 2 zones which have already been given SEZ status for cannabis type manufacturing and medicinal manufacture. So this is a list of some of the active Jamaican plants, much of which you'll be familiar with. Guinea hen weed, sarsaparilla, ball moss, turmeric, all kind of things. Right. I don't know what some of these are used for, but some of you might know. Search my heart. So this is an example of a pharmaceutical cluster. This one is actually in Costa Rica. This is the type of complex that will be developed. You will have research and development facilities. You will have manufacturing. you'll have residential complexes where the scientists and the patients who will be doing clinical trials could be housed. So, it's an integrated cluster that supports each other. So this is the creative cluster I spoke about. We're working with companies out of Hollywood, out of New York, looking at a facility that will host a range of production studios, sound studios. This is one which is in Damrep. This is in Cape Town, South Africa. Our closest competitor is in the Damrep. Last year we had over 400 productions taking place in Jamaica. You will also recall we were actively involved in the latest James Bond movie. But it's done in a very haphazard manner, and it stretches the resources. What we will do when we have our creative SEZ is allow not just the anchor production studios to be located, but also facilities for persons who will be doing the costume design, the carpenters who will be making the sets, the people who will be engaged in sound. So you have not just the big companies, but also the small persons who do makeup, having the ability to have a facility where they can engage and participate in this thriving industry. So this is just showing me how a film cluster works and the range of activities that are all linked together. So it's mainly driven by the production facilities. You have production, pre-production, post-production, but supporting all of that activities is a range of smaller activities. So in a typical movie, when you look at the credits that go at the end of a movie, you see a long list of things that all of these people are required to finally produce a movie. And we're hoping that we can have these in a specialized creative zone. This is some information on the aluminum cluster I mentioned. This is a 6,000 acre, 3 billion project. You might hear in the news that they're actually focusing on rehabilitating the manufacturing part, which currently is under the bauxite incentive. Once that is complete, that's when they'll get to the industrial park, which comes under the SEZ incentives. Should be it. I think this was a video. So in closing, I just wanted to thank you for coming.
In a digital age, the world is changing at a dizzying rate. Everything moves so fast, and understanding our new environment is essential to competitiveness. In business, production must be timely and customized. The world has shrunk, and in the paradigm shift, global shipping routes are changing. Barcelona is a crossroads of cultures with a strong personality. World famous for innovation, an important seat for learning and trade. It is also an international venue for global congresses and events. Barcelona is home to the Mobile World Congress, to startups, and in 2019, it will host the World Free Zones Congress. The World Free Zones organization, managed by Mr. Al-Zaruni, will hold the annual international conference and exhibition, AICE 2019, in Barcelona. Based on its innovative nature, and because it has an exceptional partner in El Consorci de la Zona Franca in Barcelona. El Consorci is an excellent partner, because with support from the Government of Spain and City Hall, It manages the logistical and industrial area of Barcelona and is a driving force behind growth in the metropolis, as well as organizing fairs and congresses. El Consorci will organize the Congress in June 2019 to host discussions on the future of the world's free trade zones at a crucial moment when the world's industries are about to take a technological leap towards the Industry 4.0 and 3D additive manufacturing. Barcelona is the ideal meeting point because it is at the forefront of Europe, with intercontinental direct flights to 43 world destinations. The debates will take place at Barcelona's Congress Center, and participants will be housed at the Hotel Fairmont, the official accommodation of the World Free Zone Congress, as well as in the enormous choice of hotels throughout the city. Barcelona is a welcoming, safe city whose marvelous cuisine enjoys elite global prestige, as well as myriad sightseeing opportunities, shopping, and sports facilities.
En junio del año 2019, Barcelona abordará cómo afrontar los cambios que están teniendo lugar en las producciones globales y los intercambios comerciales internacionales. La impresión 3D, el Internet de las Cosas, la robotización o el 5G son realidades que ya están aquí.
El Consorcio de Barcelona cuenta con usted para protagonizar el gran debate sobre el futuro de las zonas francas en la economía 4.0. Las zonas francas siempre han estado en la vanguardia de este debate y vamos a aprovechar esta oportunidad. Los esperamos en Barcelona.